Welcome back to Gold Rush Reporter, your trusted source for the latest updates and analysis on gold and silver markets. I'm your host, Conrad, and today we're diving into something that's capturing global attention: China's growing role in the silver market. Yes, you heard that right. China is at the center of a major silver squeeze, and recent reports suggest it's intensifying rapidly. The country's massive population and increasing focus on precious metals are shaping global supply and demand in ways investors need to understand. Silver prices are climbing, supply is tightening, and if you want to stay ahead of the market, you need to understand what's happening in China right now. This is more than just numbers. It's a global trend with big implications. Before we dive in, make sure you like this video, subscribe, and click the bell icon so you never miss updates from Gold Rush Reporter. Your support helps us bring you clear, professional insights every day. So, what's going on in China? China is one of the largest producers of silver and gold in the world, but the country is notoriously secretive about how much metal it actually holds. Recent reports show a surge in buying activity, especially in the Zhubei district, where wholesale shops are selling silver jewelry and silver ingots like hotcakes. Some investors are purchasing 500-gram and 1-kilogram ingots, which are popular because they carry lower processing fees compared to silver jewelry. The demand is not just from retail buyers. Reports indicate institutional-style buying is occurring as well. Videos and images show large silver slabs being transported, highlighting a growing trend. China is increasingly driving physical silver demand. Globally, this matters because as Chinese investors accumulate more silver, supply in other regions can tighten, putting upward pressure on prices. As of early December, silver reached around $58.37 per ounce in London, with intraday spikes above $59 per ounce, showing just how active the market has become. For comparison, silver has nearly doubled year to date, while gold has risen just over 50%. Understanding this is critical. Pullbacks may happen, but the trend shows that China's demand could influence prices globally, creating opportunities for investors worldwide. Knowing how and where physical silver is moving helps you make informed decisions rather than reacting to short-term swings. China's silver market is becoming more dynamic because physical metal is moving faster than ever, both in retail and wholesale sectors. In districts like Zhubei, wholesale shops report strong sales of silver jewelry and silver ingots. Investors are increasingly choosing ingots because they carry lower processing fees, making them more cost-effective than jewelry or coins. Popular sizes include 500-gram and 1-kilogram bars, allowing investors to buy larger quantities efficiently. This trend isn't just about convenience. It reflects a strategic shift in how Chinese investors are approaching silver. Many retail buyers who previously focused on gold are now turning to silver. Gold prices have risen substantially, limiting further upside potential, while silver remains more affordable and accessible, even at around $58 per ounce. Global silver markets are feeling the effect. When China absorbs large amounts of physical silver, available supply in Western markets can tighten, contributing to higher prices and more volatility. Even though the West relies heavily on paper contracts and futures, the real story lies in physical metal. When physical supply moves to markets with high demand, such as China, it creates an invisible pressure on the global price. Another important factor is cultural value. Chinese investors have a long tradition of holding precious metals, not just as investments, but as a way to preserve wealth. Silver, in particular, is gaining popularity because it offers a more affordable entry point than gold. This cultural shift is creating sustained demand that could influence global trends for years. It's also worth noting that this is not just small-scale retail activity. Videos and reports show people handling 15-kilogram silver slabs, indicating that institutional or semi-institutional buying is happening within the country. The combination of retail enthusiasm and larger purchases is creating what analysts are calling a short squeeze in the global silver market. In short, China's growing appetite for silver is reshaping global supply and demand. Prices are being pushed higher, pullbacks are temporary, and investors who understand these dynamics can make more informed decisions. One key trend is the shift of retail investors from gold to silver. Many small investors previously concentrated on gold are now turning to silver because it offers a more accessible price point. With gold already reaching high levels, silver allows investors to accumulate more physical metal with the same amount of capital. Bars and ingots, especially the popular 500-gram and 1-kilogram sizes, are in high demand because they avoid extra processing fees and provide a straightforward way to hold real silver. The rising popularity of silver in China also highlights a broader global trend. As demand in Asia increases, it indirectly impacts prices in the West. When physical metal is absorbed in one region, it reduces the supply available for other markets, creating upward pressure on prices. This is especially important given the current global short squeeze in silver. China's silver market also emphasizes practical investment strategies. Investors are not just buying for speculation, they are seeking long-term wealth preservation. Unlike paper assets or futures contracts, physical silver provides tangible security, and in China, cultural preferences make silver a highly trusted store of value. This behavior contrasts with Western markets, where paper silver still dominates, and physical delivery is less common. Another point worth noting is the institutional dimension. Reports indicate that large-scale purchases of silver slabs, sometimes weighing 15 kilograms, are taking place alongside retail buying. This combination of institutional and retail demand creates a strong foundation for sustained price growth, even if occasional pullbacks occur. From a strategic perspective, this environment offers multiple takeaways for investors. Pullbacks should be viewed as buying opportunities. Physical silver remains the key indicator of market strength, not just futures or paper contracts. Understanding regional trends, particularly in China, provides insight into potential global price movements. Finally, the long-term outlook for silver is promising. Even adjusted for inflation, silver still has room to rise compared to past bull runs, such as the 2011 highs. As industrial demand grows and Asian investors continue to accumulate physical metal, silver's trajectory looks set for further appreciation in the coming years. Recent reports from these areas reveal booming activity at wholesale shops selling silver jewelry and ingots. The retail price of silver jewelry in Zhubei has reached about 15.62 yuan per gram, while wholesale silver ingots have surged to 13.37 yuan per gram, setting new all-time highs locally. These prices reflect a market where physical demand is extremely strong, driven by both cultural preference and investment strategy. Why are ingots becoming so popular? Simply put, they avoid processing fees that are typical for jewelry or coins. Investors prefer larger bars, 500-gram and 1-kilogram ingots, because they allow bigger investments without extra cost. This behavior highlights a key principle in silver investing. Physical efficiency matters. The lower the fees and premiums, the more metal you can actually hold. Cultural factors also play a major role. In China, precious metals have long been valued as a way to preserve wealth, not just for speculative gains. While gold is traditionally preferred, silver is emerging as a practical and accessible alternative, especially for new investors. Many small retail buyers are shifting their focus to silver, taking advantage of lower unit prices while still participating in a tangible, high-demand market. Another interesting point is the scale of activity. Videos and reports show large silver slabs being moved around, suggesting that semi-institutional buyers are active alongside retail investors. This combination strengthens the market, creating a short squeeze effect that puts upward pressure on global prices. Globally, these regional trends matter because they directly impact supply. As Chinese demand grows, the physical silver available for Western markets becomes more limited, which can accelerate price movements in London and New York. For investors watching the market closely, this creates opportunities to buy strategically during minor pullbacks. In addition, China's growing silver market is helping to stabilize prices. Even when short-term fluctuations occur, the constant physical demand in Asia provides a floor, preventing extreme volatility. Over time, this will likely reshape global silver flows, creating a more interconnected and competitive market. As we discussed, China's retail investors are increasingly turning to silver because gold prices have already risen significantly, limiting upside potential. Silver, with its lower unit price, allows investors to accumulate more physical metal for the same amount of capital. Bars and ingots, particularly 500-gram and 1-kilogram sizes, are popular because they maximize the amount of metal you can hold while minimizing processing fees. This shift has created a new layer of demand that global investors cannot ignore. When physical silver is absorbed in China, it reduces available supply elsewhere. This dynamic tightens the global market and often puts upward pressure on silver prices in Western markets. Even minor pullbacks are temporary because the underlying demand remains strong and consistent. Another important consideration is the cultural approach to investing. Chinese investors value silver not just as an investment, but as a store of wealth. This contrasts with many Western markets, where paper contracts and futures still dominate. Physical silver, especially ingots and bars, ensures tangible ownership, something highly prized in China. Institutional buyers are also active in China. Reports indicate that larger silver slabs are moving within the country, suggesting that semi-institutional and wholesale investors are accumulating alongside retail buyers. This combination creates a short squeeze effect, further supporting prices and adding stability to the market. From a strategic standpoint, there are a few key takeaways for investors. Buy during minor pullbacks. Dips are normal and offer an opportunity to acquire physical silver at a slight discount. Focus on physical silver. While futures contracts and paper positions influence short-term pricing, real metal dictates the long-term trend. Monitor Asian demand. Trends in China and surrounding markets often signal shifts that will impact global prices. Looking at the long-term outlook, silver still has room to grow. Even adjusted for inflation, prices have not yet reached the highs of previous bull runs, such as 2011. Coupled with rising industrial demand, especially in green technologies, silver is positioned for continued appreciation. Finally, this trend highlights an important principle. Supply and physical demand matter more than paper trading. Understanding how China is reshaping the market gives investors a significant advantage in predicting price trends and making informed decisions. One standout example comes from the US, a George Washington flintlock pistol silver coin issued by Spector's Mint. This isn't just a coin, it's a three-dimensional silver piece crafted from 2 ounces of 999 thousandths fine silver, limited to 1,776 pieces to honor the year of American independence. The craftsmanship is incredible, featuring intricate details on the flintlock mechanism, engraved handle, and decorative pommel, all housed in a wooden presentation box. Why does this matter for investors? First, it's a reminder that physical silver carries intrinsic value, both as a collectible and as real metal. Unlike paper contracts or digital assets, pieces like this retain tangible worth, while also offering historical and aesthetic significance. For collectors, that adds an extra layer of security and appeal. Second, it highlights a broader trend. As China and other regions increase physical silver demand, collectibles and ingots are becoming more desirable as stores of wealth. Investors are looking for ways to preserve capital while gaining exposure to real silver. Large bars, 500-gram and 1-kilogram ingots, and limited edition collectibles all fit into this strategy, combining cultural and monetary value. Globally, these trends emphasize that physical silver is becoming more than just an investment. It's a cultural asset, a tool for wealth preservation, and a hedge against uncertainty. The Chinese market, with its booming demand for ingots and bars, demonstrates how a society's appreciation for silver can influence global supply and pricing patterns. From an analytical perspective, here are the key takeaways. Physical demand drives the market. Retail and institutional buying, especially in Asia, creates long-term upward pressure. Diversification in silver holdings. Investors benefit from combining bars, ingots, and collectible coins. Cultural and historical value matters. Pieces like the George Washington flintlock coin show that silver is not just a commodity, it's an asset with deep meaning. Looking forward, silver's trajectory looks strong. Even with short-term pullbacks, rising industrial demand, ongoing Asian accumulation, and historical patterns suggest higher prices are likely over time. Collectibles add another dimension for investors who want security, rarity, and tangible ownership. That wraps up our detailed coverage of China's silver market, global implications, and collectible silver trends. At Gold Rush Reporter, our goal is to give you clear, professional insights so you can make informed decisions in both everyday investing and long-term wealth preservation. Stay tuned, stay informed, and remember, physical silver is power, knowledge, and opportunity all in one.